Everyone was waiting for it. The return of retail. For years, we've been told the same story. Once Bitcoin breaks all-time highs, the floodgates open. Retail investors rush back in, altcoins explode, and the cycle repeats. That's how it worked in 2017. That's how it worked in 2021. So when Bitcoin pushed into new highs again, everyone expected the same outcome. But it never came. Retail didn't show up. And here's the part nobody wants to admit. They didn't disappear. They just left. Not the market, the casino. Because make no mistake, retail investors are still gambling, still chasing risk, still looking for fast money. They've just found better, faster, simpler ways to do it. And right now, those alternatives are draining crypto of its lifeblood. This is Web3 Verse, and today we're breaking down where retail actually went, why altcoins are struggling because of it, and what it means for your portfolio going forward. Before we get into it, quick disclaimer, this is not financial advice. This is purely educational content to help you understand what's really happening beneath the surface of this market. Now let's get into it. First, let's talk about the data, because this isn't just a feeling, it's measurable. Retail participation in crypto is not just down, it's near multi-year lows. Take Coinbase, one of the clearest proxies for retail activity. Back in the 2021 peak, they had over 11 million monthly transacting users. By late 2025, that number dropped to around 7.8 million. That's not a small dip, that's a massive contraction. And it gets worse when you look at volume. In just one quarter of 2025, over $1 trillion in trading activity disappeared from major exchanges. That's not institutional money leaving, that's retail stepping away. Now here's where it gets interesting. Because at the same time crypto activity was dropping, other forms of speculation were exploding. Take Robinhood. In early 2026, their earnings showed something very clear. Crypto revenue? Down sharply. But options trading? Equities? In other words, retail didn't stop trading. They just changed the game. And if you zoom out even further, Google search trends tell the same story. Search interest for by Bitcoin is nowhere near previous cycle levels. The average person isn't even curious anymore. They're not asking how to buy crypto. They've already moved on. So the question becomes, where did they go? Did they suddenly become long-term investors? Start buying index funds? Of course not. Retail didn't become disciplined. They just found new casinos. And the fastest growing one right now is prediction markets. Platforms where you can literally bet on real-world outcomes. Elections, interest rates, court rulings, global events. Instead of trying to understand complex crypto narratives, people are now betting on things they already follow. And the growth here has been insane. We're talking massive increases in volume, millions of new users, and billions flowing into these platforms. Because from a retail perspective, it makes perfect sense. Why spend months waiting for a crypto narrative to play out, when you can place a bet today and get paid tomorrow? Same thrill, same volatility, but faster resolution. And then there's the biggest competitor of all, sports betting. Since legalization expanded, it has absolutely exploded. Billions upon billions of dollars flowing into apps that are designed perfectly for retail psychology. Open the app, see the odds, place the bet, get the result. No wallets, no gas fees, no bridging assets across chains, no learning curve, just instant access to risk. And here's the key detail most people miss. The psychology is identical. Parlay betting, where you combine multiple bets for a huge payout, is basically the same mindset as buying low-cap altcoins hoping for a 100x. Retail hasn't changed. The environment has. Now here's the twist. There is still one part of crypto where retail is active. And it's probably not what you want to hear. Memecoins. This is the only sector that still consistently attracts retail attention. Why? Because it's honest. There's no pretending it's revolutionary tech. No white papers nobody reads. No fake narratives about changing the world. It's pure speculation, and everyone knows it. Platforms that let users launch tokens instantly have turned crypto into a factory for gambling. But here's the reality. Almost none of these tokens survive. The vast majority go to zero. And retail knows that. But they're still playing because it's simple, fast, and familiar. Now layer on top of that something even more damaging. Trust issues. Retail has been burned repeatedly. Token launches where insiders get in early, dump on the public, and walk away with profits. Projects with massive valuations but very little actual liquidity. Unlock schedules that slowly crush prices over time. The pattern has become obvious. And retail is tired of being exit liquidity. So instead of playing a game where they feel disadvantaged, they're choosing games where the odds are at least clear, even if those odds aren't in their favor. And this is where things start to affect the broader market. Because without retail, altcoins struggle. Right now, Bitcoin dominance is sitting at elevated levels. And there's a reason for that. The money coming into crypto today is not the same as before. It's institutional. It's ETF flows. And that capital behaves very differently. It doesn't rotate down the risk curve the way retail money does. It doesn't move from Bitcoin into altcoins chasing gains. It stays where it is, which means the traditional cycle structure is breaking. In previous cycles, Bitcoin would pump, then Ethereum, then large caps, then small caps. Now, that rotation is weak, because the source of the capital has changed. So what does all of this mean? Is retail gone forever? Not necessarily. But the conditions for their return are very specific. Retail typically comes back for two reasons. Either they've made money elsewhere and are ready to take more risk, or the market enters a full-blown mania that's impossible to ignore. Right now, neither of those conditions are fully in place. Could that change? Yes. If liquidity floods the system again, if headlines dominate attention, if prices move fast enough, retail could return. But relying on that? That's not a strategy. So here's the reality. The market has evolved. And in the process, it's split into three distinct layers. At the top, you have Bitcoin and Ethereum, driven by institutional capital. At the bottom, you have memecoins, the retail casino. And in the middle, you have everything else. And that middle is struggling, because it's no longer being fueled by the one thing it depended on most: retail speculation. So if your portfolio is built on the idea that retail will come rushing back to pump your favorite altcoins, you might be waiting longer than expected. Because right now, retail isn't reading white papers. They're placing bets. Now I want to hear from you. Are you seeing people around you move away from crypto? Do you think retail comes back this cycle, or is the game permanently changing? Drop your thoughts in the comments. And if you want to understand which sectors in crypto might actually survive this shift, and where the real opportunities are, check out the next video on your screen. This is Web3 Verse, and I'll see you in the next one.